What's up everyone? In today's video, I've compiled all of the big industry insiders' predictions for the future of the housing market for the next few years so we can get a complete picture of what they're saying moving forward. Then we'll take a look at Redfin's current data to see what's happening actually in real time right now in the housing market. I started with this article from Deseret News titled, "Where is the housing market headed in 2023?" and then did my own due diligence on all the predictions mentioned. If you do get some value out of today's video, I would greatly appreciate it if you would tap that like button, comment below, and consider subscribing to our channel so you don't miss any future videos. Mortgage rates have reached a 20-year high this past week, and there is no sign that they're coming down anytime soon. In fact, the Fed will most likely be increasing rates by 75 basis points in the next few weeks, which means that interest rates will most likely continue to go up. So what does this all mean for the housing market? What are all the big industry insiders saying about the next year or so? Well, let's just dive right in. It seems like the one thing that everybody agrees on is that no one agrees on what's going to happen in the housing market in the next 2 years. Some are predicting negative year-over-year price declines, while others are actually predicting price appreciation, even if it's just a little bit. So I thought it'd be interesting to sum up what each one is saying, and then we'll take a look at the real data of the housing market. Let's start with the big banks. Morgan Stanley. Morgan Stanley expects U.S. home prices to end 2022 down 11% compared to 2021 and fall another 7% by the end of 2023. The declines are in part due to the surging mortgage rates and that unforeseen home price growth. In this world, we do think that sales are going to fall steeper than we thought, said Jim Egan, Morgan Stanley's co-head of U.S. Securitized Products and Research, on the bank's housing podcast. While that would put U.S. home prices down 7% from where they are today, it only brings prices back to January 2022 level, which is 32% above where prices were in March of 2020. Next up is Goldman Sachs. Goldman Sachs predicted in August that the housing downturn had further to fall in 2023, expecting home price growth to stall completely and average 0% in 2023. Then Goldman's researchers' outlook got a lot worse. As interest rates steadily climbed higher, Goldman Sachs researchers' G10 home price model suggests home prices will decline 5 to 10% from its peak in the US. Now, this is still saying from the peak, which is 40% higher than where prices were in March of 2020. So 5 to 10% less than that is still not that bad, relatively speaking. On to Moody's Analytics. Moody's Analytics says that home prices will fall 5 to 10% unless a recession hits, and then it will get worse. Personally, I kind of feel like we're already in a recession, but this is what they're saying. If a recession hits, Moody's Analytics thinks that the price decline would widen to 10 to 15% and the drop in significantly overvalued markets to range between 20 and 25%. Next up, Wells Fargo. Wells Fargo notes that a housing correction is well underway. We now look for home prices to register year-over-year declines in 2023, with the national median existing single-family home price expected to fall 5.5% during the year. Even with the correction, our forecast has prices remaining above the average levels in 2021. Low supply and strong demand will limit the extent home prices depreciate, they wrote. If our forecast for the Fed rate cuts is realized, mortgage rates are likely to fall slightly, which will spur an improvement in sales activity and reignite home appreciation heading into 2024. Ivy Zelman is next. Zelman was an analyst that was called Poison Ivy because she predicted the U.S. housing market was at its peak in 2005 and also predicted the ensuing housing bubble that did actually burst. These days, her models predict that U.S. home prices will fall 4% in 2023 and another 5% in 2024. So that makes a 9% price drop between now and 2024. Historically speaking, that would make this one of the 3 sharpest home price drops ever recorded. The other 2 being those during the Great Depression and the Great Recession. Fortune reported noting that U.S. home prices fell 27% from peak to trough between 2006 and 2012. Up next is Fitch Ratings. Fitch expects that housing activity will fall roughly 30% or more over a multi-year period, and 10 to 15% declines in home prices. They think that national home prices will continue to correct due to the rising mortgage rates and worsening affordability at the end of 2022 heading into 2023. However, housing inventory is still constrained. According to them, they said that we have 4.1 months of housing inventory as of August 2022. And the strong job market continues to drive rising rents into later this year, which will provide a floor to the home price decline. Capital Economics believes that home prices will fall by 8%. Against a backdrop of higher mortgage rates, a weaker economy, and home prices falling earlier than expected, we have cut our forecast and now expect a peak to trough fall in home prices of 8%, down from our previous view that prices would drop by 5%. Next up is our favorite, Zillow. Zillow is forecasting a slight 1.2% home value growth through August 2023, a downward revision from an earlier forecast of 2.4% home value growth. The downward revisions come as a result of the recent housing market indicators continuing to show buyers hanging back as high as they've ever been in recent memory, Zillow researchers wrote on a September 19th post. Corelogic. This is the most recent forecast from Corelogic, and it's not completely up to date, but here's what they're saying. The Corelogic HPI forecast indicates that home prices will increase on a month-over-month basis by 0% from August 2022 to September of 2022, and on a year-over-year basis by 3.2% from August 2022 to August 2023. Fannie Mae. From a full-year perspective, the ESR Group, which stands for Economic and Strategic Research, expects Q4 national home price growth in 2022 to be 9%, down from last month's prediction of 16%. The ESR Group expects a home price decline of 1.5% in 2023, down from its previous prediction of home price growth of 4.4% in 2023. So that's what all the big industry insiders are saying about the future of the housing market. It's pretty wild to see how different they all can be, kind of looking at the same data. Well, let's take a look at Redfin's current data on the housing market to kind of see where the trends are going. The data in this report covers the 4-week period ending October 9th. Active listings, the number of homes listed for sale at any time during this 4-week period, fell 1% from the prior 4-week period. On a year-over-year basis, they rose 3%. New listings of home for sale fell roughly 2% from the last 4-week period, and they were down 19% from a year earlier. Pending home sales were down 28% year over year, the largest decline since May of 2020. Months of supply, a measure of the balance between supply and demand, calculated by dividing the number of active listings by closed sales, was 2.9 months, near the highest level since July of 2020. Homes that sold were on the market for a median of 33 days, up more than a full week from 25 days a year earlier, and the record low of 17 days from May and early June. On average, a record 7.9% of homes for sale each week had a price drop, up from 4% a year earlier. I think this one is the most telling about what's currently happening in the housing market, seeing how we're kind of all over the place with these price declines. I found another chart in Realtor.com about price reductions, so take a look at this one. They have price reductions up 8.6% year over year, so a little different from Redfin, and also this doesn't cover October. The thing I find interesting about this chart is that you can look all the way back to 2017, and we're not even at where we were in 2018 as far as price reductions, so it will definitely be interesting to see what happens moving forward. I hope you guys got some value out of today's video. I really tried to bring it all together so we can just get a broad look about what everyone's saying about the future of the housing market. Like I said at the beginning, if you did get some value, definitely consider smashing that like button, commenting below, and subscribing to our channel. It just motivates us to make more videos. And if you want to see other housing market videos, definitely check out these next two. Thanks for watching. I do appreciate it. Bye!